All right, so we've got this mountain of personal finance stuff you sent over.
Yeah.
It looks like we've got excerpts from a textbook,
Mm-hmm.
budgeting, investing, real estate, even some career advice. Feeling ready to, like, take control of your money, plan for the future, maybe even unlock some wealth-building secrets.
Absolutely.
Yeah.
We want to make sure you can make those smart money decisions,
Mm-hmm.
I feel confident about it.
Yeah. Okay, well, the textbook starts off talking about how your finances, like, totally depend on what stage of life you're in. Makes sense.
Yeah.
Like a new grad's dealing with different money pressures than someone who's about to retire.
Exactly. It's not one size fits all. That recent grad, they might be drowning in student loans, worried about an emergency fund.
Yeah.
Someone closer to retirement
Yeah.
probably wants to protect what they've saved and make sure that money keeps coming in.
It's like Byron and Tamika, that young couple in the book.
Right.
They're just starting out figuring out housing insurance already, thinking about retirement. It's wild how your financial needs change as you get older.
It is. And another thing that changes, your tolerance for risk. Younger folks might be okay with a risky investment that could really take off.
Yeah.
But as you get closer to retirement, you can't afford to lose big. Not enough time to make it back.
So it's all about time. Like, younger investors have more time to recover if the market takes a hit.
Exactly. More time to ride out the ups and downs.
Yeah.
If you're in your 20s and the market crashes, you've got decades to make that money back.
Yeah.
But if you're about to retire, a big loss could mean trouble.
Makes sense. So maybe younger investors are more into those growth stocks, the ones with high potential but also high risk.
Yeah.
And someone closer to retirement would stick to more stable investments that pay dividends.
It's all about matching your investments to how much risk you can handle and how long you have to invest.
That's making me think about my own situation. What are my top financial concerns right now? I guess taking a step back and figuring out where you are in life is important before you even think about strategies.
Absolutely. Knowing where you stand financially is key.
Okay, well, the textbook also dives into these big economic forces that can really mess things up.
Yeah.
Things like inflation and deflation. How much your money is actually worth can change when prices go crazy.
It's important to understand how those ups and downs in the economy can affect your planning. Like inflation, your money's worth less over time.
Right.
You need more of it to buy the same stuff. Deflation, prices go down. Sounds good,
Yeah.
but it can actually hurt the economy because people stop spending.
It's like that part in the text about unstable currency making investing a pain. Like, you might see gains on paper.
Yeah.
But if inflation is eating away at those gains, are you really winning?
Exactly. You got to factor in inflation when you're setting financial goals and making investment decisions. You want to make sure those returns are beating inflation so your money's still worth something.
Have you ever, actually felt the effects of inflation?
Oh, yeah.
I remember a couple years ago, grocery prices went through the roof. Had to rethink my budget for sure.
Yeah. It happens to a lot of people.
Uh-huh.
Shows you got to be flexible. Adjust your plans as the economy changes.
Speaking of plans, the textbook really pushes setting smart goals. Specific, measurable, attainable, realistic, and timely. They actually seem to work.
They do. Give you a roadmap to reach your financial goals.
Yeah.
Instead of just saying, I want to save more money,
Yeah.
a smart goal would be, I'm going to save $500 a month for the next year so I have $6,000 in my emergency fund.
It's about breaking those big, scary goals down into smaller steps you can actually handle. So instead of, I want to buy a house, it's, I'll save $1,000 a month for a down payment. Feels more manageable, right?
Exactly.
Yeah.
And helps you stay on track and motivated.
This next part really grabbed my attention. Understanding assets, debt, and equity. Talks about how assets can store wealth and make you money. Pretty cool.
Definitely. The book uses some great examples. Like, remember the one about investing in an apartment building?
Yeah.
It's not just about the building going up in value. You're also getting that sweet rental income.
It's like your money's working for you. But then the book throws in this curveball. Good debt. Isn't all debt bad?
That's a good question. It challenges the way a lot of people think about debt. While high-interest debt, like credit cards, can be a trap, not all debt is created equal. What about taking on debt to invest in your education?
Oh, yeah.
That can lead to a higher salary down the road.
So it's about being strategic with debt, like investing in your ability to make more money in the future.
Precisely. That brings us to another important piece of the puzzle, budgeting. The textbook focuses on keeping track of your income and expenses, but the real key is understanding your cash flow.
Yeah.
Where's your money coming from and where's it going?
And the book goes deep on different budgeting methods. Remember, Mark? juggling multiple income streams.
Right.
Budgeting helps him manage all that complexity, make sure everything's covered.
Exactly. A good budget doesn't just track spending, it helps you make informed financial decisions. Figure out your needs where you can cut back and make sure you're using your money in a way that matches your goals.
I've tried a few different ways to budget over the years. Apps, spreadsheets, even that old school envelope system.
Yeah.
What about you? What budgeting method works best for you?
Personally, I like using budgeting apps. A to these spreadsheets. Apps give you real-time tracking and easy categorization. Spreadsheets let you do more detailed analysis and planning.
So it's about finding a system that fits your style and helps you stay on top of your finances.
Absolutely. Now let's talk about something people usually dread. Taxes.
Taxes.
I know.
The textbook lays it all out: income tax deductions, exemptions, even filing strategies.
It emphasizes planning throughout the year instead of waiting till the last minute. And it's interesting how different tax strategies apply to different stages of life.
So like a young professional might want to focus on deductions to lower their taxable income.
Yeah.
Someone nearing retirement might be more concerned with minimizing taxes on their retirement money.
Exactly. Knowing how taxes fit into your overall financial picture is a big deal. Have you ever been surprised by a tax bill, good or bad?
Oh, for sure. Once got a way bigger refund than I expected. It was nice,
Yeah,
but it made me realize I wasn't being smart about my withholdings during the year.
it happens. It's a good reminder to be proactive and maybe get some advice from a professional if you need it. Taxes can be tricky, but with a little effort, you can make sure you're not overpaying or getting hit with any surprises.
Okay, so after taxes, the book dives into how to manage your cash and savings. Checking accounts, money market accounts, CDs, all those ways to keep your money safe and maybe earn a bit of interest.
Right, but the big takeaway here is understanding the balance between liquidity and return.
Yeah.
You need to access your money when you need it, but you also want it to be working for you, earning you something. That's where knowing the differences between savings accounts comes in.
So a checking account's easy to access, but usually pays very little interest.
Right.
A money market account might pay a bit more, but could have rules about withdrawing.
Yeah.
And CDs typically pay the most, but lock your money in for a set time.
It's all about choosing the right account for your needs and goals. If you're saving for a short-term goal, like a down payment on a car, easy access is key. But if you're saving for retirement, which is way down the road, you can afford to lock some money away in a CD for a better return.
It makes me think about my own savings. I keep some money in checking for bills and stuff, but I also have a high-yield savings account for emergencies and long-term goals. What about you? How do you handle your short-term savings?
Similar to you, some in checking for immediate needs, but I also use money market accounts and short-term CDs to get more interest on money I don't need right away.
So it's about finding that sweet spot between access and growth. Now, this next topic always feels kind of tricky: credit and debt. The textbook covers everything: credit cards, loans, interest rates, credit scores.
It's a lot. But the crucial thing is understanding how much debt really costs, especially those high-interest credit cards.
Yeah.
That can really get out of control if you're not careful.
The book has this part about how closing a credit card can actually hurt your credit score.
Yep.
Who knew?
Yeah, it's counterintuitive. But it shows how important it is to really get how credit scores work.
Have you ever used credit for a big purchase? I remember financing my first car and feeling totally lost.
It happens. That's why it's important to be informed and borrow responsibly before you take on any debt. Got to know the loan terms, the interest rates, and how it could affect your credit score.
So it's about having a plan to manage that debt and making sure it fits with your overall financial goals.
Exactly. Now, talking about big purchases, let's get into something a lot of people find stressful: buying a car.
Oh yeah, buying a car can be a minefield.
It can.
The book's got a whole section on it: figuring out what you need, researching options, figuring out financing.
What I like is that it focuses on the total cost of ownership, not just the sticker price. You've got insurance, gas, maintenance, depreciation. It all adds up.
I love that they talk about negotiating.
Right.
It's easy to get caught up in the excitement of a new car and forget to haggle. Any tips on how to avoid those classic car buying traps?
Do your research before you even go to the dealership. Know what you want, what it's worth, and what financing options are out there. And don't be afraid to walk away if the deal isn't right.
Have you ever felt pressured into buying a car you weren't sure about?
Oh, yeah.
It's a good reminder to be in control and make a decision that works for your budget and your needs.
Absolutely. Okay, let's go from those four wheels to something even bigger: home ownership.
The big one. The textbook gets into all the nitty-gritty: mortgages, down payments, closing costs, Even the psychology of real estate.
It is a lot.
It's fascinating.
It is. And it's interesting. The book talks about how the government has programs to help certain people get home loans.
Oh, wow. Shows you there's help out there to make owning a home more possible.
Right.
But what really stuck with me was the idea that owning a home is more than just an investment. It's a lifestyle choice.
It's a long-term commitment, financially and emotionally. It's about finding a place that fits your life in your budget.
Do you dream of owning a home someday? I've always imagined having my own place, a space to make my own and settle down. Big decision, but definitely something I'm working towards.
It's a great goal to have. And with careful planning and research, can be an amazing experience.
Okay, after that big purchase of a house, the textbook dives into another must-have insurance.
Right.
Health insurance, home insurance, car insurance, disability insurance, life insurance. It's a lot.
It can be. But the key is understanding what each policy actually covers. Insurance is there to protect you if something unexpected happens. Got to know what you're paying for and what you can count on.
And they point out how your insurance needs change as you go through different life stages. A young single person's going to have different priorities than a family with kids or someone getting ready for retirement.
Exactly. As your life changes, your insurance needs change too. If you're young and healthy, basic health insurance might be enough.
Yeah.
But as you get older, start a family, you might want more comprehensive health insurance and even life insurance to protect your loved ones.
So it's not just a one-time thing. You got to reassess your coverage every so often and make sure it still fits your needs and the potential risks you face.
Exactly. Now let's talk about something that's often put off until later retirement and estate planning.
Yeah, it's easy to avoid thinking about those things, especially when you're younger, focused on other goals. But the textbook makes a good case for starting early, no matter how old you are.
Absolutely. The sooner you start saving and planning for retirement, the better. Your investments have more time to grow. Estate planning isn't just about money either. It's about peace of mind for you and your family.
They even say it's important to have a will no matter your age.
Exactly. It ensures your assets are handled the way you want and your loved ones are taken care of if something happens to you.
So estate planning isn't just for the rich or the elderly. It's a smart move for everyone.
Absolutely. It's about taking charge of your future.
Now let's get into a topic that can be both exciting and scary: investing. The textbook covers a ton of options: stocks, bonds, mutual funds, real estate, even commodities. It's a lot to absorb.
It can be. But the book does a great job of breaking down the basics and explaining the principles behind investing. It's about understanding things like risk-return diversification and asset allocation.
One of the things that really struck me was the section on behavioral finance, how our emotions and biases can mess with our investing decisions.
Oh, yeah.
Sometimes we're our own worst enemy when it comes to money.
We are. It's about recognizing those biases and figuring out how to minimize their impact. For example, if you tend to panic and sell when the market dips, a buy and hold strategy might be better for you.
Or if you're super optimistic about certain trends, you might want to be more conservative to balance that out.
Exactly. It's all about matching your investment strategy to your goals, your risk tolerance, and how long you plan to invest.
Do you have any investments right now? I'm always a bit nervous about the stock market.
Yeah.
It feels so unpredictable.
It can be.
Yeah.
That's why diversification and good research are so important. Don't put all your eggs in one basket. Spread your investments across different asset classes, industries, even different parts of the world. That helps reduce your overall risk.
Diversification, got it. But then there's the question of active versus passive management.
Right.
Do you go with a pro who picks stocks trying to beat the market? Or do you stick with an index fund that just tracks a specific market index?
There's a lot of debate about which is better. And like a lot of things in personal finance, the best approach depends on your situation and what you prefer. Actively managed funds could do better than the market, but they cost more. Index funds usually have lower fees and tend to do well over time.
So you're weighing the chance of bigger returns with active management against lower costs and steady growth with passive management.
Precisely. And speaking of career, that's our next stop.
Okay, so the book goes into how your career is a big part of your financial picture.
Makes sense.
It's your main source of income. They cover it all: career development, job hunting, salary negotiation, even your legal rights as an employee.
It's a holistic approach. It shows that your career is always changing. It's about always learning new skills, expanding your network, and adapting to how the job market is evolving.
I loved that story about Sandy in the hospitality industry. She didn't just wait for jobs to come to her. She went out there and networked, went to events, and made connections that led to her dream job. Super inspiring.
It shows how being proactive and building relationships can really open doors.
They also talk about the importance of negotiation, not being afraid to ask for what you're worth.
Hmm.
Have you ever negotiated a salary or asked for a raise? I gotta admit, it still makes me nervous.
It can be scary,
Yeah.
but it's an important skill to develop. And remember, it's not just about asking for more money. It's about showing your value, highlighting your accomplishments, and speaking up for yourself.
So it's about knowing your worth and backing it up with proof and a clear, confident presentation of your skills.
Exactly. The textbook also gives a good overview of employment laws, discrimination, workplace, safety, fair labor practices.
It's about understanding your rights as an employee and knowing where to get help if you're treated unfairly or illegally. That knowledge is power.
It is. Can make a real difference in the workplace.
All right, we've covered a ton already, but I'm ready to go even deeper into some of these topics. Let's start with stocks.
Sounds good.
Yeah.
Stocks can be a mystery, but the textbook does a great job of explaining them.
They break it down. How companies issue shares to raise money and how those shares are then traded on the stock market. So when you buy a share on the New York Stock Exchange, you're basically becoming a part owner of that company.
Exactly. And the exchanges like the NYSE and NASDAQ, they're like marketplaces where buyers and sellers connect to trade those shares. But most of us don't trade directly on the exchange. We use brokers.
Right. And there are all kinds of brokers out there. Full-service brokers who give advice and research.
Right.
Discount brokers who charge less but offer less guidance.
It's about choosing the right broker for your needs and experience.
Mm.
Do you want someone to hold your hand through the process, or are you okay managing your investments on your own?
And then there are all these different types of stocks. We talked about blue chip stocks, the big reliable companies, and growth stocks, the ones with high potential but also more risk. It can be a lot to figure out.
It can. Understanding those different types of stocks and how they fit into your overall plan is key. Are you looking for stocks that pay dividends regularly?
Right.
Or companies that could grow really fast?
It's about aligning your investments with your risk tolerance and your time horizon again.
Exactly. And remember, investing isn't just about numbers and charts. It's about understanding how people behave and how emotions can affect the market. The book talks about how investor sentiment and market trends can create bubbles, driving prices up and then leading to crashes.
It shows that the markets don't always make sense, and our emotions can get in the way. It's important to have a good strategy, do your research, and not get caught up in the hype or panic.
Exactly. Okay, let's switch gears from the maybe a little crazy world of stocks to something more stable. Bonds.
Okay, so bonds aren't as exciting as stocks,
Maybe not.
but they're an important part of a diversified portfolio. The textbook explains how bonds are essentially loans that investors make to companies or governments.
Right. And in exchange for lending their money, bondholders get regular interest payments, those coupon payments.
Yeah.
And then the principal is paid back when the bond matures.
Well, one thing I've never quite understood is the whole bond rating system.
Yeah. It can be confusing.
The textbook talks about these ratings from agencies like Moody's and Standard & Poor's, but what do they really mean for investors?
They're basically assessing how likely the bond issuer is to pay back the money. So they're helping investors figure out the risk of not getting their money back.
So a higher rating means less risk?
Generally, yes. But as with most investments, lower risk usually means lower potential returns.
Another trade-off. Higher-rated bonds might be safer but with lower returns, while lower-rated bonds carry more risk but could pay off more.
Exactly. You got to find that balance that works for your risk tolerance and your investment goals.
The book also talks about how interest rates affect bond prices.
Yeah.
It's a bit complicated, but basically when interest rates go up, bond prices go down and vice versa.
It's an important concept because it shows that you got to understand how interest rates and bond prices are connected when you're making investment decisions.
Okay, I think I'm starting to understand bonds a bit better. Now let's talk about mutual funds. Those investments that pool money from a bunch of investors to buy a mix of assets.
Mutual funds are a good way to spread your investments without buying each thing individually. The textbook covers the different types of mutual funds, stock funds, bond funds, index funds, actively managed funds.
I've always been confused by the fees that come with mutual funds. Expense ratios, load fees, all those costs that can reduce your returns.
It's true. You need to understand those fees and how they affect your investments. The book explains them well and stresses comparing different funds before you invest.
And then there's that whole active versus passive investing debate. The book mentions both. Actively managed funds where a professional picks stocks.
Yeah.
Passively managed index funds that just follow a market index. Which one's better?
That's a tough question. And like a lot of personal finance stuff, the answer depends on your specific situation and what you're comfortable with. Actively managed funds might do better than the market, but they charge more. Index funds usually have lower fees and tend to do well over the long haul.
So it's choosing between potentially bigger returns with active management
Right.
or lower costs and steady growth with passive management.
Exactly. It's all about picking the approach that matches your goals, your risk tolerance, and your time horizon.
Okay, let's move on from stocks, bonds, and mutual funds to something a little more concrete, real estate.
Real estate has always been seen as a way to build wealth. The textbook looks at both direct and indirect real estate investing. Direct investing means owning and managing properties yourself.
Yeah?
Indirect investing means owning shares of companies that own and manage real estate.
They also mention REITs, those real estate investment trusts,
Yeah.
which let you invest in real estate without the hassle of being a landlord.
REITs are companies that own properties that generate income. Things like shopping malls, office buildings, apartments. They can give investors a steady stream of income and potential for growth over time.
So REITs are kind of like a mix of stocks and real estate.
In a way, yeah. You're investing in a company, but that company's value is tied to its real estate.
Okay, makes sense. And lastly, let's wrap up this investment overview with commodities.
Right. Commodities are those raw materials that the world needs: oil, gold, wheat, coffee. The book does a great job explaining how they're traded, what affects their prices, and the risks and rewards of investing in them.
I remember learning about how commodities can be used for hedging, like an airline buying fuel futures to protect itself from rising jet fuel prices.
Exactly. A lot of businesses use that strategy to manage their risk when it comes to the prices of the commodities they need.
Commodities can be risky, but they can also help diversify your portfolio and potentially give you big returns.
That's true. And like with any investment, do your research, understand the risks, and make decisions that make sense for your overall strategy.
All right, we've covered a lot of ground in this deep dive into personal finance. We talked about figuring out where you are financially, setting goals, explored tons of investment options from stocks and bonds to mutual funds, real estate, and commodities.
It's been quite the journey so far. But I hope it's given you some good insights and made you feel more confident about managing your money.
I know, I've learned a ton. And I think the biggest takeaway for me is that personal finance isn't a destination.
Right?
It's a journey. It's about always learning, adapting, making choices that match your values and goals.
It's about being in control of your financial well-being and creating a life that's secure, fulfilling, and meaningful.
It's been great diving into this stuff with you. And to everyone listening, thanks for joining us on this deep dive into personal finance. Remember, understanding how money works is powerful. The more you know, the better equipped you'll be to make smart decisions and build a brighter financial future for yourself and those you care about.
Welcome back to our deep dive. Last time we talked about understanding your financial stage setting, SMART goals, and all those different investment options.
We did. And now I'm kind of curious about something that's always been a bit fuzzy for me, consumer strategies. The book talks about being a smart shopper, making decisions that line up with your values and goals.
Yeah, it's not just about spending less, it's about spending wisely, thinking about what you're getting for your money.
Like, am I actually going to use this thing, or is it just a spur-of-the-moment purchase?
Exactly. It's about breaking those impulse buying habits and making sure your spending matches what's important to you.
The book even talks about doing research before you buy. Remember Sig, who wanted that perfect gaming keyboard? He didn't just grab the first one he saw. He compared features, read reviews, made sure he was getting the best value.
It shows how doing your homework can pay off, especially for those bigger purchases. It's about taking charge and being informed before you spend your hard-earned cash.
Research is key. Got it. Okay, let's talk about a big purchase that's on a lot of people's minds, buying a home.
Ah, yes, home ownership. It's a huge decision, both financially and emotionally. The textbook really digs into all the details: mortgages, down payments, closing costs, even the psychology of owning a home.
I was really interested in how they explain the different types of mortgages, fixed rate, adjustable rate. It can be so confusing trying to figure out which one's best for you.
It's about understanding how each loan works and picking one that fits your financial goals and how much risk you're comfortable with. A fixed-rate mortgage gives you stability, predictable monthly payments.
Right.
An adjustable-rate mortgage might start with lower payments, but there's a chance those payments could go up later if interest rates rise.
So fixed rate is more stable, predictable, and adjustable rate could be cheaper at first, but those payments might increase. It's a trade-off.
Exactly. And then there's the down payment. Putting more money down up front can lower your monthly payments, but it also means tying up a big chunk of your cash.
That's where opportunity cost comes in, right? The money you put into a down payment could be invested elsewhere, maybe earning you a higher return.
That's the idea. It's a balancing act between keeping your housing costs low and having some financial wiggle room.
And then there's all that due diligence stuff. Getting a home inspection, researching the neighborhood, understanding all the legal mumbo-jumbo in those mortgage documents can be overwhelming.
It can. But it's important if you want to be a responsible homeowner. You want to make sure you're making a good decision and avoid any nasty surprises later on.
And don't forget the emotional side of things.
Right.
It's not just about the money. It's about finding a place that feels like home, a place to build memories and make a life.
Absolutely. It's about finding a place that speaks to you, not just one that fits your budget.
Okay, so we've covered the ups and downs of buying a home. Let's move on to something that can be a little scary: insurance.
Insurance, it's often seen as a necessary evil.
Yeah.
But it's really about protecting yourself and your family if something unexpected happens.
The book covers all kinds of insurance: property insurance, health insurance, auto insurance, disability insurance, life insurance. It's hard to keep track of it all.
It is. But the key is knowing what each type covers and making sure you've got the right coverage for your situation.
They really stress reading the fine print, asking questions, not just signing without thinking.
It's important. You got to know what you're paying for and what you can expect if you need to use your insurance.
And they point out how your insurance needs change as you go through life. A young single person's going to need different coverage than a family with kids or someone getting ready to retire.
Right. Your insurance needs change as your life changes. If you're young and healthy, you might only need basic health insurance.
Yeah.
But as you get older, have a family, you might want more comprehensive health insurance, maybe even life insurance, to protect your loved ones financially.
So it's not something you just set and forget. Got to reevaluate your coverage as you go and make sure it still works for you.
Exactly. And talking about planning for the future, let's dive into something that people often put off: retirement and estate planning.
It's easy to avoid thinking about those things, especially when you're younger and have other priorities. But the book makes a strong argument for starting early no matter your age.
I agree. The earlier you start saving and planning for retirement, the better. Gives your investments more time to grow. And estate planning isn't just about money. It's about peace of mind.
They even talk about having a will no matter how young you are, just to make sure your wishes are followed and your loved ones are taken care of.
Exactly. So estate planning isn't just for the wealthy or older folks. It's a smart move for everyone.
Okay, so we've covered a lot in this deep dive into personal finance: budgeting, saving, investing, buying a home, understanding insurance, and estate planning.
We have a lot of information to take in.
We've touched on so many things that can help you take control of your financial future.
Absolutely. It's about taking charge of your money and your life.
And now I'm ready to get back to the world of investing. There's still so much to explore. Okay, so let's get back to those investments. We talked about being smart shoppers and all, but now I'm ready for something a little more exciting: stocks.
Stocks can be a wild ride, but if you understand how they work, it's not so scary. The textbook explains how companies offer shares to get money, and then those shares are traded on stock markets.
So if I buy a share on the New York Stock Exchange, I'm like a mini owner of that company.
You got it. And the exchanges like the NYSE and NASDAQ,
Yeah.
they're where buyers and sellers come together to trade those shares. Most of us don't do that directly, though, right? We use brokers.
Right. And there are different kinds of brokers. Some offer advice and research. Others are more DIY with lower fees.
It's about finding the right fit for you.
Yeah.
Do you want someone to guide you, or are you comfortable making your own investment decisions?
And then you've got all these different types of stocks. We talked about blue chip stocks, the big stable companies, and growth stocks with higher potential but also more risk. It's a lot to figure out.
It is. It's important to understand those different categories and how they might fit into your overall plan. Are you looking for stocks that pay dividends regularly? Or are you more interested in companies that could grow really fast?
Right. It's all about matching your investments with your risk tolerance and how long you plan to invest.
Exactly. And remember, investing isn't just about numbers. It's about understanding how people behave and how emotions can affect the market. Remember that section on behavioral finance?
Oh, yeah, how our emotions and biases can mess things up.
Right, like how investor sentiment and trends can create these bubbles where prices get inflated and then boom, you have a market crash.
It just shows you the market isn't always logical and our emotions can really get in the way. It's about having a strategy, doing your research, and not getting caught up in all the hype or panic.
Exactly. Okay, enough about the crazy world of stocks. Let's talk about bonds now.
Bonds. They're not quite as exciting as stocks,
Sure.
but they're important for a balanced portfolio. The textbook explains how bonds work as loans that investors make to companies or governments.
Right. You're essentially lending money and getting interest payments in return. Those regular interest payments are called coupon payments. And when the bond matures, you get the principal back.
One thing I've never really understood is the whole bond rating system.
It can be confusing. The textbook talks about bond ratings from Moody's and Standard & Poor's, but what do those ratings actually tell us?
Yeah. What do they mean for investors?
Those ratings assess how risky the bond is. They're basically looking at how likely the issuer is to pay back the money. A higher bond rating means less risk. But remember, lower risk often means lower potential returns.
Ah, another one of those trade-offs. Higher-rated bonds are safer but might not earn as much. Lower-rated bonds are riskier but have the potential for higher return.
Exactly. Finding the right balance depends on your risk tolerance and your investment goals. And the book also mentions how interest rates can affect bond prices.
Yeah, that part always throws me off. So when interest rates go up, bond prices go down, and the other way around.
That's right. It's important to grasp that concept because it shows how those two things are connected when you're making investment decisions.
Okay, I think bonds are starting to make a little more sense. Now let's talk about mutual funds. The book describes them as investments that pool money from a bunch of investors to buy a diverse mix of assets.
Mutual funds are a great option if you want to diversify your investments without buying everything individually. And there are a lot of different types: stock funds, bond funds, index funds, actively managed funds.
I've always been confused by the fees that come with mutual funds. There are expense ratios, load fees, all these costs that can eat into your profits.
You're right. It's really important to understand those fees and how they impact your returns. The textbook explains these fees clearly and really emphasizes comparing different funds before investing.
And then there's the whole active versus passive management debate. Should you pick an actively managed fund where a professional is choosing stocks, or a passive index fund that just follows a specific market index?
It's a big question. And like many personal finance topics, the answer depends on your individual situation and preferences. Actively managed funds have the potential to do better than the market, but they also charge higher fees. Index funds usually have lower fees and tend to perform well over time.
So active management might mean bigger returns, but you pay more. Passive management means lower costs and steady growth over time.
Exactly. It's all about choosing the approach that works for your goals, your risk tolerance, and how long you plan to invest.
Okay, let's move on from the world of stocks, bonds, and mutual funds to something a bit more tangible: real estate.
Real estate is a classic way to build wealth. The textbook looks at both direct and indirect real estate investing. Direct investing means you're buying and managing properties yourself. Indirect investing means owning shares in companies that own and manage real estate.
They also mention REITs, real estate investment trusts. Those let you invest in real estate without all the hassle of being a landlord.
Right. REITs are companies that own properties that generate income, things like shopping malls, office buildings, and apartments. They can offer investors a steady stream of income and potential for growth over time.
So REITs are kind of like a hybrid between stocks and real estate.
Yeah, you could say that. You're investing in a company whose value is tied to its real estate holdings.
Okay, that makes sense. And finally, to wrap up this investment section, let's talk about commodities.
Commodities are those raw materials the world needs: oil, gold, wheat, coffee. The textbook explains how they're traded, what influences their prices, the risks and rewards of investing in them.
I remember reading about how businesses use commodities for hedging, like an airline buying fuel futures to protect itself from price increases.
Exactly. It's a strategy that helps businesses manage their risk when it comes to the prices of the raw materials they need.
Commodities can be pretty volatile, but they can also offer diversification benefits and potential for big returns.
True. And as with any investment, do your research, understand the risks, and make sure your decisions align with your overall investment strategy.
Wow. We've covered so much ground in this deep dive into personal finance. We talked about where you are financially, setting smart goals, and explored so many investing options: stocks, bonds, mutual funds, real estate, commodities. It's a lot to take in.
It is, but I hope you found it valuable. Personal finance can be complex, but understanding the basics can really empower you to make informed decisions.
I know I've learned a ton, and the biggest takeaway for me is that personal finance is a journey. It's about constantly learning, adapting, and making choices that align with your values and your goals.
It's about being in control of your financial well-being and building a life that you love, a life that's secure and fulfilling.
It's been great exploring all this with you. And for everyone listening, thanks for joining us on this deep dive into the world of personal finance. Understanding money is power. The more you know, the better prepared you'll be to make smart choices with your money and build a brighter future for yourself and those you care about.